will come back to help her dad. Today we're diving into rental property investing and asking the question, should you invest in real estate in 2020? We'll start with a quick definition of what rental property investing actually is. This involves purchasing properties with the intent of renting them out to tenants, generating income and hopefully building equity over time. Historically, rental property investing has been a solid wealth-building strategy, offering both cash flow and long-term appreciation. However, 2020 presented some truly unique market conditions. The global pandemic and the resulting economic uncertainty created an environment unlike anything we've seen in recent history. So, the purpose of this video is to really assess whether rental property investing remained a viable option in 2020, given these unprecedented circumstances. Right, let's jump into the market analysis for rental property investing in the context of 2020. First, we need to consider the economic downturn, paying close attention to how it's affecting employment rates. Lower employment could lead to increased vacancies in your rental properties. Keep an eye on the government stimulus and how it's influencing the overall market. Next, let's talk about interest rates. The record low mortgage rates present potential opportunities for investors, but be aware of the potential for these rates to increase in the future. We also need to analyze housing market trends, including the shifting demand between urban and suburban areas and the price fluctuations occurring in different regions. Finally, understand the legal landscape, especially rent control and eviction moratoriums, as these can have significant impacts on your profitability, introducing risks and challenges for landlords. T's explore the potential benefits of investing in rental properties. Firstly, there's the opportunity for passive income through consistent cash flow generation, which can contribute to achieving financial independence. Secondly, rental properties often experience appreciation, leading to a long-term increase in property value, amplified by leveraging debt to potentially achieve higher returns. Thirdly, there are significant tax benefits, including depreciation deductions, various expense write-offs, and even the potential to invest in designated opportunity zones. Finally, rental properties can act as an inflation hedge, with rental rates typically adjusting along with inflation, thus helping to protect the real asset value of your investment. Let's talk about the key risks and challenges you'll face when investing in rental properties. Property management is a big one, involving careful tenant screening, ongoing management of tenant issues, and constant maintenance and repairs, all of which require a significant time commitment and can potentially cause stress. Vacancy is another risk, leading to a loss of rental income and the need to cover carrying costs during those vacant periods. Property damage can also pose a threat, resulting in unexpected repair expenses and the need to carefully consider your insurance coverage. Liquidity is also a factor, as real estate is generally a less liquid asset, meaning it can be difficult to sell quickly, especially in an economic downturn. Finally, there are financial risks to consider, such as interest rate fluctuations on your mortgage, and the potential for over-leveraging your investments, which could lead to negative cash flow. Right? Let's delve into the various financing options available for rental property investments. First up, we have traditional mortgages, which include loan types like fixed-rate mortgages offering stable interest rates over the loan term, and adjustable-rate mortgages where the interest rate can change periodically. Keep in mind the down payment requirements for these mortgages, as well as the credit score considerations that lenders will assess. Next, we have investment property loans, which are specialized loan products designed specifically for real estate investors, although these may come with potentially higher interest rates compared to traditional mortgages. Private lending provides a faster route to accessing capital, which can be crucial in competitive markets, but be aware that this option may also involve higher costs. Finally, portfolio loans are loans secured by a portfolio of multiple properties and they offer the advantage of diversifying risk across several assets. Let's talk about due diligence and research, which is absolutely crucial before you jump into any rental property investment. First, conduct thorough market research by analyzing rental rates and vacancy rates in your target area. You want to identify those promising neighborhoods where demand is high and vacancy is low. Next, get a professional property inspection to uncover any potential structural issues. This will help you estimate repair costs accurately and avoid unpleasant surprises down the road. Then, dive into the financial analysis by calculating your expected cash flow and return on investment, making sure to carefully analyze all expenses and revenue streams. Finally, don't forget about the legal considerations. Understand your local landlord-tenant laws, and it's always a good idea to consult with a real estate attorney to ensure you're complying with all regulations and protecting your investment. Really succeed with rental property investing in 2020, it's crucial to focus on properties that generate strong cash flow, and that means negotiating the best possible purchase price right from the start. Another key strategy is thorough tenant screening. Utilizing credit and background checks helps minimize the risk of non-payment and potential property damage to your investment. Don't forget the importance of building a healthy reserve fund to prepare for those inevitable unexpected expenses and potential vacancies, and this will also help you maintain overall financial flexibility. Finally, it's vital to stay informed about ever-changing market trends and be ready to adapt your strategies as needed to stay ahead of the curve. Thanks for watching. See you next time on Helper Dad. So, to wrap things up, let's quickly recap the key things to consider when thinking about investing in rental properties in 2020. It's really important to emphasize the need for serious due diligence and smart risk management. Taking the time to do your homework can be the difference between success and costly mistakes. As a final thought, we would encourage you to dig deeper and get some professional advice before you jump in. If you're looking to learn more, check out some of the helpful resources we have listed below, like suggested websites and books.